Hello traders, this is Rich from TradeSight. This is the market preview for the coming session for Thursday, June 6, 2013. Markets had a pretty rough day for the bulls. Great day for the bears. Based on the today's price action, the averages across the board were universally negative, and it was just a really negative day overall. The advanced declines were terrible. There was really no flight to safety in gold, so really anything outside of U.S. Treasuries really got hit pretty hard today, and there was really no place to hide. I think the real features today, I think, were really done internally in the market, not just in price. We'll take a look at price first, and then we'll move on to what the market looks like internally as well. So let's take a look at the ES futures. All right, so here's a look at the ES futures. You can see that we broke down and lost on a closing basis. At least this key support here is 1625, which is a 4/8 level in the Murray math box. We made a new low on the move, and we also made a new low close on the move. Keep in mind here that now we came into that very key area of support, which was from that breakaway gap. We talked about that last evening in the market preview. And the next real area of support is going to be coming in right where the breakaway gap originated from, around 1595 or so. The 50 DMA is just a little bit higher than that, so between the 50 DMA and the breakaway gap window is going to be your key support area for tomorrow if we continue to the downside. If the market picks up momentum and does want to continue to the downside, the next real level is going to be the static trend line, this horizontal red line here on the chart off this Seeker 9-bar run to the upside. So a couple key areas there to keep in mind. We've got the 50 DMA, the breakaway gap level at 1593, and then the Seeker line at 1582. To the upside, the gap is still open from the previous day, so we can take a look at the gap fill, and then also the 10 EMA to the upside is going to be key resistance if we do pivot back to the upside. I wouldn't be surprised tomorrow to see a little bit more of a measuring day ahead of the non-farm number. We've had some pretty decent selling ahead of that number. This is the big monthly employment number, so we could see a little bit of profit taking from the shorts and maybe see this thing curl up tomorrow afternoon into the number. If the market fails to do that, it would really be a real sign of weakness from the market overall. The other thing to keep in mind is on a very minutiae short-term basis, the CCI is getting down close to that minus 200 level. Once you get to that minus 200 level or more on the CCI, that's when you become short-term oversold. So we're kind of getting there, but that's really just a 1 or 2 day thing. That's where you really want to start taking in some shorts that you had on the table and starting to look for a bounce opportunity to lay out some new shorts. But we're not quite there yet. Just a couple things to keep in mind. On the NASDAQ side, NASDAQ was actually a little bit strong relative to the broad market. The broad market was down about 1.4%. The NQs were only down about 1.2%. So for sure the NQs were stronger on a relative price basis. NQs pretty much did what the broad market did in using this breakaway gap window here for support. We touched the 7/8 level at 29.29, but held there so far. We definitely have a key distribution here, a rollover. We're down below the 10 EMA on a closing basis and followed through, so we're certainly short-term negative. The key area to watch is going to be yesterday's low, with a 29.29 area. If we break below that, we're going to have this little bit of a vacuum when we get into a gap until we close into this gap, until we close that gap window, which is going to be about 290 or so. So 2090, we'll see our first support. More support comes in about 289 and a half, which is going to be the 50 DMA, where that lines up with the 6/8 level. To the upside, we're going to find resistance at the 10 EMA if we trade that, and the gap was pretty much closed on the NQ side. The ES side still a little bit open. The NQ side right now is just a little bit more oversold than the NASDAQ side according to the CCI. We're already minus more than 200, which kind of leads us to the inclination that if we don't really violate that gap, we could see a little bit of a measuring day or a little bit of a bounce going into the into the non-farm number, but we'll have to wait and see what happens with that one. All right, now getting to what's probably the most important chart of the day, and certainly the near term here. This is a cumulative advanced decline line. I want to point your attention here to the upper chart, which is the cumulative advanced decline on the New York Stock Exchange. What we have here is we definitely have a breach of our trend line. We have been down below it now 2 days. We had very negative advanced declines today, about minus 1,800 or so. We're breaking it, so you can see the rollover formation here. This is definitely the most serious rollover and downturn of the year so far. So the underlying bid for the market is really starting to change its character here, and this is a really notable break. And this will eventually turn the market lower from the current levels. So it really just depends on how the market reacts to the non-farm number. Does it need to game it? Does it need to pivot off that and retest the high? It doesn't really much matter at this point because this line is broken, and I expect that this is going to roll to the downside and ultimately take us lower for the overall NQ and ES futures. Now on the lower chart here, this is the NASDAQ side of the market. Has a little bit of a different look to it. This is the basic regression channel that we've been using, and you can see that the regression channel here, as I'm just relining this, we had this regression channel that we were working in very steadily for most of the year. We had this little breach and kind of tumbled down here, only to recoup it. We've been talking about that. We never really got up to the upper fringe of this before, which is not really a sign of strength, and which is what you want to see. Kind of broke down, back down below it again. This new line here on the chart is -1 standard deviation. So if we start to break down below this, this is going to be a real problem. This is going to be a real sign of weakness on the NASDAQ side that would confirm what's already happening in the broad market side. Or if you want to look at it this way, we had this breach of the channel here in the NASDAQ side, which implied that ultimately the New York side would develop weaknesses as well. The New York side has now developed weakness, has broken, and when the NASDAQ side breaks -1 standard deviation again, we're going to be in more of a negative tape, more momentum to the downside, and that's going to be when you really want to start evaluating things and start leaning heavily on the short side. Here's a look at the 10-day trend. You can see we got very, very close to that overbought threshold, but didn't quite hit it. Now we're starting to move back up here, but we're a long, long way away from that 1.35 oversold threshold. So if the bears want to exert themselves, if they can muster the courage to challenge the bulls in the market, there's plenty of room here for the market to head lower before this classic indicator indicates that we're short-term oversold and need to bounce. So we could have multiple days down here and cover a lot of range before we get any kind of a reading here that's going to challenge that 1.35 oversold area on the 10-day trend. And here's a look at the S&P divided by the TLT. You can see we're definitely taking a turn to the downside here, meaning we're going more in favor of risk off with bids in favor of the TLT and offers in favor of the S&P side. If we get down to this 13.60 area, that's going to be near-term support. If we break that and violate that to the downside, that's going to be a very meaningful break. Just keep in mind that while we did recoup this drop here and got back up into the channel, we never challenged the high of the channel and had as much relative strength in the market as we did earlier in the year. So we're really starting to change character here in the overall market. Now, as far as the individual sectors go, the XAU was the top gun on the day, which is certainly a bearish indication in there. That's always a safe haven. Gold really didn't perform all that well today. Gold was up just very nominally on the day. The one thing that I noticed is that the BTK index was the last laggard on the day, and it's starting to get a little bit short-term oversold. Might want to take a look at that for a potential bounce late afternoon tomorrow. Just be careful about getting a little bit too greedy with shorts on that one going into the close tomorrow. The broker-dealer index was near the bottom of the list, which is never positive in a bull market. The cyclical index was also very weak, which is again not a positive sign. The BKX was also weaker than the overall market, so you kind of see the theme here. The more defensive stuff was a little bit higher on the list. The utilities, the gold and silver names were higher, but the real risk-on stuff was just classically weak today. All right, one final chart for today. Here's the Dow Gold ratio. You can see that this is really starting to pull to the downside. We breached the midpoint of the regression channel to the downside. When this ratio is rising, traders are putting on risk in favor of equities over hard assets like gold, and we're definitely seeing just the opposite right now. Definitely, I would think that this lower fringe of the regression channel will be in play here before this is all done. So definitely keep looking at the GDX, silver stocks, all of the precious metal miners for an opportunity here on the long side as traders start to take a little bit more of a defensive posture and start taking some profits here short term in the market. All right, folks, we'll check in again tomorrow with you and see what we're going to have going into the non-farm number. And as always, thanks for listening. This has been Rich for TradeSight.